In the second video here of banks and credit unions or depository institutions, I'm going to talk about the different services they offer. As you can see here on slide 12, and I am jumping around because they have a scenario with Josie, and you guys can go through that on your own, but it's more important to get through this stuff. These are services offered by banks and credit unions. I'm going to start at the top and go clockwise. Savings tools, credit, financial advice, safe box deposit, and special needs payments. And we can go through each one real quickly here, but these things are a cluster of services offered by a bank. Obviously, banks make money off interest. That's the price to borrow money. Okay, you can earn interest and you can be charged interest. You can earn interest by having savings accounts or checking accounts. The interest you're going to earn is very minimal. There are some other different type of high-end checking accounts that you can make a little bit more interest, but nothing you're going to get rich off. Also on stocks and bonds, you can earn investments. You can earn interest also. You can be charged interest on loans, credit cards. Okay. I think you guys understand that. The interest rate is expressed as a percentage. Okay. And when you do a loan, they look at your credit history and score. Basically, your credit history and score is how well you pay back your bills, and it calculates out into a score. Higher the score, the better the interest rate you're going to get. All right, so the lower the interest rate is, the better the score. Lower the score, the higher the interest rate you're going to get. And we'll get into a whole section on that. Just a little bit of an interest rate. If you have a 2% interest rate on $100, if you're earning the interest, you'll make $2. If you have to pay the interest, you'll have to pay $2. Some savings tools. This is important here to know. Savings tools are different than retirement tools, which we'll get to in weeks to come. But savings tools help you manage your money. You may earn interest, but it's not going to be a ton. The two types of savings tools, the most common is checking account and then savings account. Most people have a checking account. I guarantee all of you have that right now, and you might even have a savings account in some of your worksheets. I know you guys do. Checking account, you can get at your money anytime you want. You don't have to make sure you have to make sure you have money in there, but you can go buy a pop. You can make unlimited transactions. Savings account, the purpose there is to store and house your money, and keep it there for a while and let it grow. And you're limited to how many times you can move money in and out of your savings account. Here's the differences between the two. So a checking account, you write checks or use a debit card. You can withdraw cash or transfer money back and forth. With a savings account, you're limited. Okay, you don't have a checkbook. You have to go in the bank. Usually your debit card can be tied to your savings account to where you can go withdraw money from your savings. Okay, so this is just the biggest difference is look at all the options here you can do with your checking. Savings, they want you to hold that money in there. You can earn interest on both, so you can see here, but typically you get more on savings. What is credit? Credit is borrowing money. Okay. How can you do that? Through loans and credit cards. And you'll have to pay the money back plus interest. So if I have to take out, $10,000 to buy a used vehicle, the $10,000 is the money I'm borrowing. That's the principal amount. When it's all said and done, I'll end up paying back more than $10,000. The extra after the $10,000, the interest that I've paid back on the loan. Okay, that's how banks and credit unions make their money, on the interest. Other services banks and credit unions offer: financial advice. So this would be, should you get into this business? Is this business playing good? Retirement plans, okay, investments, real estate, things like that. Safe deposit box is a box that they put in the vault, steel. And you can put keepsakes in there, jewelry, money, cash, coins, deeds, pictures. And they're in the bank vault, and it's safe there. You got to pay so much per month. They have different sizes. And then special need payments such as traveler's checks, certified checks, cashier's checks.